firstly take us through what led to the upward trend today from yesterday.
Okay, that is the...
Come again, please.
Today we're seeing an upward trend in the market once again. What factors attributed to it?
Oh yes, thank you, Fenly. We would expect an upward trend again today, particularly due to the bullish run that we have been seeing from value investors in the market. The ASI appreciated slightly, yesterday, and we expect this to continue in as much as there's going to be some profit taking from the part of retail investors.
Well, let's take a look at next week. Which stocks are you keeping an eye on?
Well, the banking sector, for one, continues to be quite attractive, again, for value investors and for the long run. I noticed that it has been dominating both the bid and the offer tables throughout the week. Because it has been on bid because of the value investors who want to come in for long positions. But at the same time, most of the stocks in the banking sector have actually appreciated for as much as even up to 20% over the last month. So as a result, there has also been some profit taking. Nevertheless, overall, we expect it to continue to stay strong and to continue to return good earnings to investors.
So you're still keeping an eye on banking stocks. Speaking of the banking sector, we know that Zenith Bank, UBA all came out with results this week, and GT Bank is expected to release its results as well. What are some of the expectations out there from the market?
I believe the outlook for the sector and even the market at large is quite positive. Well, like we have been emphasizing over the last quarter, a lot of the provisioning and the issues that led to profits being eroded in the sector are no longer anticipated. And again, even like we expected from the likes of Zenith Bank and UBA, they released quite impressive results. And also we expect GT Bank to come out with its results sometime, perhaps next week, and we see it making some huge profits, even some profits around the range of 26 billion, particularly as it's even one of the most efficient of the banking stocks that are listed on the Nigerian Stock Exchange.
Where are some of your area of concerns with GT Bank?
Well, GT Bank doesn't pose so much of a threat to us, in our opinion, because again, like I said, I would like to emphasize the fact that its ratios have been, I would say, among the most impressive compared to its peers in the market and compared to other banks. When we look at its historical returns on equity and its historical net profit margins and its operating margins, that has always been quite encouraging to investors.
All right, let's move on to Total Nigeria. What do you make of the results that came out?
Yes, Total released its Q4 results on Monday, the 29th of March, and this result was to a large extent very much in line with our projections. While the turnover was just slightly away from our projections, the profit before tax nevertheless had a slight disparity to what we projected, and this was primarily due to some increase in selling and marketing costs that the company had to bear in the last quarter. But nevertheless, the dividends per share declared were largely in line with what we expected. While we were forecasting about 13 naira per share, the company released a total dividend for the year of 11 naira per share. And so the fair value, our fair value, I beg your pardon, is quite much in line with the bullish run, which would insinuate that a long position should be taken in the stock of Total.
Are you positive on its outlook for this year?
Yes, Total has happened to be quite a steady company. Compared to its peers in the petroleum marketing sector, we have been seeing strong and stable earnings. Again, like I said, the revenue that was actually made was very much in line with our projections, and we do not anticipate any instability or any other factors that will lead to that declining. Total has a leveraging point which a number of other petroleum marketing companies do not have. And this is the access to refined products, I would say perhaps at a much cheaper rate and at much stable terms than its peers due to its relationship with Total SA in France, which is its parent company.